$19 billion. Vanished. Just like that. In a single day, the crypto market saw a tidal wave of red, wiping out billions and leaving investors shell-shocked. Bitcoin, our supposed digital gold, took a nosedive. And the altcoins? Oh, the altcoins got absolutely wrecked. If you woke up, checked your portfolio, and felt your stomach drop, trust me, you are not alone. This is one of those moments that makes everyone ask the big question. Is this it? Is this the end for crypto? Before we all hit the panic button and sell everything for a loss, let's take a deep breath and break down what actually happened. This wasn't just some random Tuesday downturn. We're talking about a massive liquidation event. Over $700 million in leveraged long positions were wiped out. Think of it like this. A huge number of traders were betting that prices would go up, using borrowed money to amplify their bets. When the market dipped, all those positions were automatically closed, creating a cascade effect. It's like a line of dominoes, and once the first one falls, the rest come crashing down, pushing prices even lower, faster than anyone can react. So, what was the trigger? The initial spark seems to have come from a combination of factors. First, we had reports that SpaceX, one of Elon Musk's companies, had written down the value of its Bitcoin holdings. Now, whether they sold or just reevaluated on paper, the market heard sell. The news cycle picked it up, and fear started to spread. At the same time, we have the ongoing macroeconomic uncertainty. The Federal Reserve is still playing its cards close to its chest regarding interest rates. Higher rates mean less cheap money floating around to invest in riskier assets like crypto. This looming threat has kept a lid on any major bull run for months. It's the perfect storm of negative news and global economic jitters. Let's talk about Bitcoin specifically. It broke below some really key support levels. For weeks, it had been holding strong, building a foundation that traders were watching closely. When it broke through that floor, it was a major psychological blow. For many technical analysts, this was a clear signal that the bears were in control, at least for the short term. But here's the thing about Bitcoin. It's done this before, many times. We saw similar and even worse crashes in 2021, 2020, and the infamous crypto winter of 2018. Each time, the headlines screamed that Bitcoin was dead, and each time, it came back stronger. This resilience is a key part of Bitcoin's story. Now for the altcoins. This is where the real pain was felt for many. When Bitcoin sneezes, the altcoin market catches a hurricane. We saw double-digit percentage drops across the board, from well-known projects to smaller, more speculative tokens. Why does this happen? Because when confidence in the market leader Bitcoin falters, investors rush out of the riskier assets first. Altcoins are further down the risk curve. They have smaller market caps, less liquidity, and are often more susceptible to sentiment swings. This is a brutal but important reminder of the inherent risks in the altcoin space. Diversification is key, but so is understanding that in a market-wide panic, correlations tend to go to 1. Everything goes down together. So, is this the end? Let's be real. It's highly unlikely. This looks more like a classic, albeit brutal, market correction and leverage flushout than a fundamental breakdown of the entire crypto thesis. What we're seeing is the market cleansing itself of excessive greed and speculation. These shakeouts, as painful as they are actually healthy in the long run. They wash out the weak hands and the over-leveraged players, creating a more stable foundation for the next potential move up. Think about the bigger picture. The technology hasn't changed. The developers are still building. Major institutions are still slowly but surely integrating blockchain technology and digital assets into their long-term strategies. The Lightning Network on Bitcoin is growing, Ethereum's ecosystem continues to expand, and real-world use cases are being developed every single day. The fundamental value proposition of a decentralized, transparent financial system hasn't disappeared just because prices dropped for a week. So what should you do right now? First of all, this is not financial advice, but a perspective from someone who has been through these cycles before. Don't panic sell. Selling at the bottom, driven by fear, is one of the biggest mistakes investors make. Take this as a learning opportunity. Did you overinvest? Were you too concentrated in risky altcoins? Were you using leverage? These are the moments to reassess your strategy and your risk tolerance. It's easy to be a genius in a bull market, The real test is how you navigate the storms. For those with a long-term belief in this space, these dips can be seen as opportunities. Dollar cost averaging, where you invest a fixed amount of money at regular intervals, is a strategy designed for moments just like this. It allows you to buy more of an asset when the price is low and less when the price is high, smoothing out your entry point over time. If you believed in a project at a higher price and the fundamentals haven't changed, then it's arguably a better value proposition now. The psychological game is half the battle. It's tough to see your portfolio value cut down. It's natural to feel fear, uncertainty, and doubt, the famous FUD. But successful investing often means being greedy when others are fearful, and fearful when others are greedy, as the old saying goes. This market crash is a stark reminder that crypto is still a very young, volatile asset class. The journey to mass adoption will not be a straight line up. It will be filled with thrilling peaks and terrifying valleys. This is just another one of those valleys. In conclusion, while the $19 billion crash was a shock to the system, it's far from a death knell for crypto. It was a leverage-driven cascade fueled by negative news in a fragile macro environment. It's a stress test, and for long-term believers, it's a test of conviction. The core technology and the long-term vision remain intact. The market has been cleansed of excess. And while we might see some more choppy waters ahead, this is not the end. It's just another chapter in crypto's wild and unpredictable story. Thanks so much for watching, everyone. I know these times can be stressful, so I hope this breakdown helped give you some perspective. What are your thoughts on this crash? Are you buying the dip, holding on, or rethinking your strategy? Let me know down in the comments. And if you got any value from this video, please hit that like button and subscribe for more content. It really helps the channel out. Stay safe, stay informed, and I'll see you in the next one.